Hi guys, thanks for watching my video. This is Farouk from Farouk Trading, and I trade the ES Mini. As I mentioned before, I do not claim to be an expert, so I'm not giving any trading advice. I'm here to just share my experiences with you as I go along this journey, and hopefully you can learn, and so can I. The topic here is do not fall in love with your trade. And this is a continuation of the emotional trading aspect because it is a big topic. And a part of this is today's topic is dealing with accepting the ambiguity or uncertainty of the trade. Uh, so, so let's talk about that. Let's talk about do not fall in love with the trade. So today was a lot of rotation. You can say some chop back and forth. Uh, and so what happened? Let's rewind into yesterday and last night overnight. So yesterday was a half day of trading because of the Labor Day holiday and kids going back to school. And we see that there was a poor high. The volume was relatively light, and we see elongation with a double distribution, and uh, and then an excess tail or excess bottom over here. Overnight, from the settle from yesterday, we see overnight inventory was long, you would say, but very balanced. I mean, that's a very balanced overnight trading situation or overnight distribution. So going into today, where did we open? We opened in the range. Here's the open, and it's actually in the range of yesterday and in the value. So the yellow box represents the value area, and so we opened in range in value. When we do that, when we open in range and especially in value, we can anticipate the odds are more likely to have a lot of chop in the market, especially earlier on. And then if there's no movement later on in the day, then we're going to look at chop for most of the day, which is what we got. So as advertised, getting chop based on profile theory, that's what we got. Uh, what did the market do and what did the market not do? So when the market opened, and here's the A period over here, we can look at it here, the market had checked down, had basically kept going back and forth on the open, which shows a lot of uncertainty, lack of confidence, lack of conviction. Checked down and then came back up. Then in the next 15-minute period, which is the A2 period, it opened near the top of A1, again checked down, came back up, formed a good high, so the volume was pretty low, 17, and then came back down. Now, there was a lot of volatility. This was moving fast. So when the bullets are flying, how do we process that real time? We're here calm, cool in the evening, 6:30 p.m. After the fact, and we're watching and reviewing this. But what did the market not do? So let's say we somehow wanted to trade the A period, which was hard to do, and maybe you got lucky and made money, and maybe you lost money. But it makes a high over here, A period high. What it did not do is it did not take out the overnight high. And in context of, well, there's actually a lot of things in context. You have the August settle over here. You have the September open. Here's the September open. Here's the August settle. And the market today did not take out the overnight high and then came back down. So we're now trading below the September open and we're trading below the August settle. So we're on the bottom half of these larger term references. Then we jump into the B period. The B period, this happened, you have to be on the ball, paying attention, because this happened very fast. The B period opened and came right down and then just kept going down. So A period did not take out the overnight high. B period just goes down. So this is an indication that, okay, this is perhaps not going to be, this is the session high. We don't know that. It could be taken out later. But for now, the market's not taking this out. It's going down. So this is how we can try to stay on the right side of the trade. Now, look what happens. B period comes down. It moves so many handles from 29.11-ish. So that's like a good 20 plus handles down. That's a big move. Then it has volatility over here, B2. So that's the second 15-minute period of B. So B2 has a lot of volatility over here, a lot of chop. And we've got single prints that were printed, which means double distribution. What we want to see is, are we going to do continuation, or are we going to have an upside move? It was tricky because the bottom of the B period looked like it was about to take off, came back down, and then by one tick took out the B1 low, and so B2 took it out by one tick. This is a good low, but it's hard to read in the moment because it's 200 plus volume, whereas B1 was only 22. So it makes a person feel, a trader feel, there's ambiguity and uncertainty. Do we take the long? What's going on? So B2 rallied and came right on the tick in line with the A low. Okay, then we want to look at yesterday's value area and the value area low, which was at 29.02. B period did not come exactly into the A low, yesterday's value low, but it came close. C period opens, stops, does not continue. So we know that we're looking at a rotation up. So when I say do not fall in love with a trade, this is the trade, the B period trade that I'm referring to, that if we took the short from here and we were looking for continuation, it stopped. The other thing to look at is, where did it stop? What did B period low not do? With all these single prints, it stopped and did not take out yesterday's low. So there's information, a lot of information in what the B period low did not do. It did not take out yesterday's low. C period comes and we see a good low. So this indicates that the market is not continuing down. The market, in fact, was going up. So if you wanted to take a trade to go long, there is a short trade, or a long trade, but a short move, a small move to go up. This is what I refer to as being open-minded and being flexible of the mind, mental flexibility, having mental flexibility to say that, okay, we're not going down, let's go long. So do not fall in love with the short trade from B period, and do not fall in love with a long trade betting on the long side in the C period. So this is, and we're dealing with ambiguity, because the ambiguity of the A high and then the B high, and this happened fast. When the B opened, it moved down fast. You have to make a decision quickly. So we're dealing with uncertainty and ambiguity. The best we can do is put a limited risk trade. You know, if we enter roughly around here at 29.10, and, you know, putting a stop at 14.50. So risking about 4 handles, but the downside was a 15 to 20 point move to the downside. We're dealing with uncertainty, but based on the information we have, that A period high did not take out the overnight high, that tells a lot. Then the day turned into a rotational day, and as we saw the point of control developing from the C periods, then we're getting into the D period, we saw 2 wide, 3 wide, 4 wide. Now we know that point of control is developing here, value is developing here. We're likely to see, odds are, a rotational day, which is what we got, which means that the high end of the range was the A high, the low end of the range was the B low. Again, the B low did not take out yesterday's low, the A high did not take out the overnight high. So that is the information we have to go on. So today's trading day was either you stand aside, step aside, or if you're going to try to trade it, look for the extremes from that are away from the point of control. So the E period high, and then even the G period high down, the I period low traded up, and then M period was rather tricky because the volume was high over here. I can show you that. The M period low had 600 plus, 600 plus, 600, 600 plus. So it was not necessarily a good low based on the volume, but the momentum was there in terms of one time framing up. We can see that this was the low, the I period low, J, K, L, M. So it just, we one time framed up. So based on that, if you wanted to enter the last M period long, you could have done that. I was not comfortable with that because of the low over here wasn't a good low for me. Okay, hopefully this made sense to you. If you have any questions, going into tomorrow, right now we're playing the balance rules. Bear in mind we did one time frame down for 2 days in a row, yesterday and today. Value is overlapping to the downside today from yesterday, and we are below some key reference areas such as the monthly August settle and the September open. So we are below these key references. Value is developing below that. So we want to see tomorrow where value develops. If we continue to develop down, overlapping to down, or even further down, if we double distribute and value gets really pulled down, then we know that we're really in a downtrend. Or does value start to come back up? Okay, thanks very much. If you liked my video, please leave a comment, give some likes, subscribe to my channel, and I'll talk to you soon. Thanks. Bye.